Ladies and gentlemen, Matthews here from M&F FOREX Traders. I'm here with the trade forecast on USO of about 1 to 31 risk reward ratio, risking 12 pips and to make about 393 pips right here from start to finish, step by step. Make sure that you watch the rest of the video to actually find out how I do all this. All right, so let's get it. So right now I'm currently on the 4-hour time frame, and if you zoom out, you can tell that the market for some time was in a downtrend, then broke these highs to the upside, and we saw the market coming to the downside, and now we're seeing the market going to the upside, meaning the most recent price action is actually to the upside. Okay, so you can see that the market has been making higher highs and higher lows right here. It's very clear that the market has been pushing to the upside. Okay, so that means that we should look for buying opportunities. Okay, and then if I zoom in just right here, you can see that we had some nice levels right here. Some of the things to note here is that we had this almost equal low right here, which was left behind right here. So if you can use this two right here, you can see that the market actually created an equal low. So for me, this is liquidity. Okay, for me, this is liquidity. Let's go ahead and label that as liquidity. This is liquidity right here. This is liquidity zone. Okay, and if you pay particular attention below that liquidity, I'm seeing this nice level right here, which is a drop base rally. We have a drop base rally. Okay, and in that drop base rally, what does it do? It breaks structure to the upside. And what does that tell us? Continuation of the trend. Okay, so that means that the market is willing to go to the upside. Great. So we have liquidity right here, and we have break of structure to the upside. It means that the market is going to the upside. Great. So after that, we go and identify our order block. Okay, so we have a drop base rally in an uptrend, and then we have a break of structure, and we have this nice level right here. So if you pay attention, this is a big zone right here. This is a very big zone. So you extend this to the right side, you're going to realize that it has been touched already. However, you guys know better, right? We don't trade like that. What we do is that we like to refine our entry. So for us to refine our POI, we have to go to the down lower time frame. So just on the 2-hour time frame right here, we can already see something interesting right here. You can see that. Remember, we've seen this level right here. So let's see how many pips was this initially. So this was about what? About 89 pips. However, we don't trade like that. So what do is that you go to the lower time frame so you can find a better entry. So you can see just by going to the lower time frame, you can already simplify and reduce your stop loss level significantly. So if you come here, you're going to realize that it's from 49, from 89, we've dropped it to 50 pips. Again, 50 pips is way too big. So what do? We go further. Let's go to the 30 minutes time frame. To the 30 minutes time frame, where we are going to look for our POI. So remember, we are always trying to make sure that we are getting the smallest stop loss so that we can maximize on our profit. So on the 30 minutes time frame, you can already see that we can actually still reduce this to this level right here, because that was the last candle. However, if you look at this again, it's actually still big. All right, so let's try and measure the number of pips. We're going to realize that this is about 30 pips. Guess what? We need to have a stop loss of at least half of that, then we can settle. So for now, we go again to the 15 minutes time frame. We are going to actually find that candle right there. We want that candle. So you can see that the last candle seems to be this one. So what do is that we go lower. Okay, so we want to refine our POI so that we get the best of entries. Okay, so we are back on the 15 minutes time frame. On the 5 minutes time frame. Remember, we started from the 4-hour time frame. Now we are back to the 5 minutes time frame. So for me, I'm going to settle for that candle right there. So that will be my candle. So let's go back now to our time frame. So let's see how it's looking now. Okay, you can see that our POI is actually small. All right, that's nice. So let's see how many pips this is now. So let's see how many pips our POI is. You see, our POI is about 13 pips. So let's do this right here. Let's bring in our 2 and then point it right here. Stop loss just there. Our target, which is our target? These highs here is our target. So we're going to do just that. And then we're going to do just that right here. And then adjust this to the right side. So you can see that our stop loss is roughly about 12 pips. From 100 pips, we've actually reduced our stop loss to just about 12 pips. That's the power of multiple time frame analysis. So you need to be able to analyze from the higher time frame to the lower time frame so that you can actually get the best of entries. Of course, there can be some downside to this where you miss out on some trades, but I guess we'll always miss trades once in a while. The most important thing is to make sure that when that trade comes along, you are able to what? You are able to actually take advantage of that. So this particular one will be that particular setup right here. So we have a drop base rally demand zone right here. Okay, we just label that. It's important, very important for you to be able to label your zones so that you know exactly what you're looking at when the market actually comes to your area. What else? Another important thing that I always look for is inefficiency. So you can see that we have inefficiency right here. We have inefficiency right here. Okay, so what does this mean? It means that the market needs to come and take out this inefficiency before the market goes to the upside. All right, that's liquidity right there. We have inefficiency and then we have another block right here. It means that there's a higher chance that the market might come to this level. So what we're looking for right here is for the market to pull back into this level so that we can have our entry and we're able to push to the upside. All right, so that's what we are waiting for right here on the US or crude oil right here. This is a beautiful, beautiful setup. You've seen how we've analyzed this from the higher time frame to the down time to the lower time frame and everything step by step. That's how we come up with our setups. We watch it, we actually follow this and wait for price to come to our level, and then we'll be able to actually execute once the market comes to our area. So I don't have to be on the chart every time. What I have to do is that just come here and actually set an alert such that when the market comes to this area, I'll be notified that the market is in my zone. And guess what? Once the market just comes here, I'll be able to receive a notification on my phone and also on the PC. Then I'll be notified that the market is in my area. So we have a very, very, very nice setup right here. As you can see, we have our liquidity area here, which we always want for the market to take out. So we wait for tomorrow. We're going to wait for the Asian session to be taken out and this liquidity right here to be taken out. And once that has happened, if the market comes to this level right here, we'll be able to execute. So this is a 1 to 31 risk to reward ratio. The stop loss is 12 pips and our target is 393 pips. That's a 1 to 31.7 risk to reward ratio. A beautiful risk to reward ratio to set up right here. So of course, what we're going to do is we're going to send this to our private community. So let me just show you what we do. So what I always do is that I'm always preparing in advance. So this is USO. So we're just going to, okay, this is a buy opportunity. Our stop loss is going to be at this level right there, and our TP is going to be at that level. And as always, we use proper risk management. That's what we do always. So it's very simple. What I do is that I just come here and I copy this. You can see this is my stop loss, and I'm just going to insert it there. Okay, this is my stop loss, which is the 12 pips right here. So this is 12 pips. Great. So, and my target is how much? 393 pips. Beautiful. This is an absolutely beautiful, beautiful, beautiful trade setup. 393 pips. Of course, this is potentially a swing trade. It can take a few days for it to reach target. Of course, that if the market actually decides to actually come to us right here. So such moves can take like one. This is look at this is 1, 2, 3, about 3 days. Sometimes four, depends on how volatile the market is at that particular time. So this is how it is, guys. This is a beautiful forecast from start to finish on USO of about 1 to 31 risk reward ratio, 12 pips stop loss, and 393 pips target. So if you need to learn how to do this exactly like I've shown you, we have our online course which we call our M&F Mastery course, which goes just at $250 US. When you get that particular course, you get lifetime mentorship by me, you get lifetime signals in our private community, you get books, also you get audio books by Mark Douglas, both the Discipline Trader and Trading in the Zone. These are very, very essential if you want to become a consistently profitable trader in the market. All right. And of all that, we have over 30 videos of me explaining our strategy and everything else. And above all, you have 24/7 access to me. Whenever you have questions, you can jump on a live chat with me on a live call so that you can clarify whatever you are facing if you're having any problems. All right. So you guys, I hope you found value in this video. If you did, make sure you subscribe, like the video, comment in the comment section. Until next time, goodbye.